Hello, everyone. I'm Chris Kapches, CEO of Chestnut Park Real Estate, and today I'm going to be presenting to you the April market report for Toronto and region. I'm going to begin this presentation by apologizing because consistently through the first 4 months of 2025, I've been pointing out how moribund the residential resale market is. And unfortunately, in April, I'm going to be talking about similar numbers. But I wanted to start this by also indicating that we have three really positive aspects that are contained in the data that if you don't do a deep dive on it, you might miss it. Obviously, we're in a chaotic, kind of turbulent economic time. Kind of the geopolitical stuff that's happening, particularly as it relates to tariffs and the economic impact of those tariffs is having a very negative impact on the real estate market in the Greater Toronto Area, but also on the real estate market, I may add, throughout the country and even through the United States. However, as I said, there are some positives, and we'll get to them. If we look at the kind of overall numbers, as I said, they're kind of gloomy. Total sales came in at just over 5,600, which is 23% fewer than the number of sales that took place last year. And last year, as you probably remember from previous market reports, was not a particularly robust resale year in the Greater Toronto Area. Average sale price slightly off, not much, about 4%, coming in at $1,107,000. And the number of days on market has increased from 19 days to 25 days. So those are the numbers you can see from the chart on the screen, the overall numbers. And I'd be remiss if I didn't point out that the inventory levels are going up over 27,000. That's kind of a historically high number of properties on the market. That number should be qualified, though, because what we're seeing is somewhere between 35 to 40% of the overall inventory are relisted properties that were previously on the market but didn't sell. So the overall number of 27,000 plus of listed properties, somewhat deceptive. The real number is somewhat less than that because those properties, a lot of them have already seen and been on the market and didn't sell. So we shouldn't be too overwhelmed by the inventory levels, although it must be repeated and emphasized that they are now historically high. But let's delve into the numbers. And if you recall from our previous report last March, we talked about the trifurcated marketplace. And what we meant by that was that the marketplace is sort of divided between what's happening in the City of Toronto, the 416, what's happening in the 905 region, and what's happening in the condominium apartment marketplace. And they're each of them very distinct in the way that they're operating. Historically, marketplaces used to operate in a kind of a homogeneous way, but that is clearly not happening in the current market. The sector that is in terrible difficulties is the condominium apartment sector. And if time were to permit, it would be interesting to get into that marketplace in some detail, because not only is the resale market, as far as condominium apartments is concerned, suffering, but new construction is suffering. And then on top of that, there's this almost underground marketplace associated with assignments of agreements of purchase and sale of properties that sold, and now the initial buyers are having difficulties closing on those transactions. So that market is really kind of murky, and it's clearly reflected in the data as the April data that was produced by the Toronto Real Estate Board indicates condominium apartment sales in the 416 are down by about 30% compared to last year, and even higher than that in the 905 region, almost 32%. So when we look at the overall numbers, we must remember that 35 to almost 40% of those numbers are condominium apartment sales. So they're impacting the overall numbers in a very negative way. If we move away from the condominium apartment marketplace and look at detached and semi-detached property sales, we see a very different market. So for example, detached properties in the 905 in April all sold for 99% of their asking price. They sold in only 22 days, and they sold for approximately $1.4 million. If we move into the 416, we see that all detached properties, on average, of course, sold for 100% of their asking price in only 19 days and for approximately $1.7 million. Those are strong numbers, and they are very distinct from the numbers that are being driven by the condominium apartment marketplace. If we dive a little deeper and look at semi-detached properties, the numbers are literally shocking compared to the overall numbers. So for example, in the 905, all semi-detached properties sold for 104% of their asking price. I'm going to repeat that, 104% of their asking price. They did so in only 16 days and for an average sale price of slightly over $1 million. In the 416, the numbers are even more startling. All semi-detached properties sold for 107% of their asking price. Again, I'm going to repeat that, 107% of their asking price in only 14 days. Only 14 days. Properties go on the market, they're marketed, offers come in, they're sold, and then they're reported sold in only 14 days, and for $1.3 million on average. So those are very strong numbers, and it's an indication of the demand that's out there. The problem is, of course, the uncertainty. Otherwise, even more sales would be taking place at higher numbers in the case of the detached and semi-detached properties. So what does all this tell us? Well, as I said at the beginning of this presentation, there are some positives in this marketplace. First of all, the performance of detached and semi-detached properties as compared to the performance of condominium apartments is really strong. And that strength, we see it in the numbers, and we see it carried forward into May. Secondly, every month since the beginning of the year, there's been an improvement in the number of sales that have been reported. And you can see from the chart exactly what I mean by that. Every month, starting in January, there's been an improvement as we have moved through into April. And lastly, and it's not in the April numbers, but early May numbers indicate that we're doing about 20% better than we were doing in April. So May is already demonstrating that it's moving forward in a very positive way. Couple of things, if they were to happen, would really impact this market. Bank of Canada is meeting in June, on June the 4th, a reduction in the bank rate, which would in turn make its way into the mortgage interest rates, will have a very positive effect, give consumers a positive approach to the marketplace. And secondly, a continued calming of the whole tariff issue, particularly if Canada, like the UK, can cut a deal with the United States as far as tariffs are concerned, would also have that calming effect, that certainty that would then translate into an improved residential resale market. So that's where we find ourselves today after the numbers for April have come in and the early numbers for May. So gloomy results for April, but there's positives there, as I pointed out, and early May numbers are also showing very positive change. So I look forward to presenting to you the May results of the residential resale market, and I'm certain they're going to be very positive, particularly compared to anything that we've seen so far this year. So until then, thank you very much.